Hey gang, welcome to another exciting episode of Money Talks. I'm your host, Bill Barheit. This is where we get to talk about all things money, crypto, government regulation, hopefully not necessarily government interference, but we'll get into that this week. I have been on the road for a couple of weeks now. I was in Miami. I just came back from Dubai. I'm in London now. I had a fantastic 8 days in London. I was at the Satoshi Roundtable. Congratulations to Bruce and Amy and the team at Satoshi. What a fantastic event. 400 people from around the world, several participants from the economic and finance ministries within UAE. It was wonderful to spend time with them. I got to go to the economic ministers' offices and spend even more time with them after the event. So thank you for having me. It was really a special week. I learned a lot about what's going on in the region. Okay, by the way, I forgot my high-res camera on the road. I've got the lighting down, but I forgot the high-res camera, so you're stuck with the laptop lower-res camera, and I apologize for that. All right. So I'm going to be in London for a few days, then back to the States. So much going on in crypto. Abra's expanding. We're hiring in different regions, and so I'm having meetings with folks. I'm really excited, and we'll have more to say about that in the coming weeks. Okay, so I want to talk to you today about price action. There was some news overnight about Kraken and the SEC regarding staking. I'm going to give you my perspective on what's going on in the markets over the next few weeks, and we've got some interesting op-eds that are coming out right now that I want to talk to you about regarding the state of crypto banking, which obviously affects Abra and indirectly all of you. All right, so I'm going to get right into it. So first, I want to talk about price. So I'm going to bring up the trusty chart here. I did a little prep work, so you can see here. Let me explain all this crazy lines that are going on. So obviously the green and the red are the candle charts that I always show you. This is the daily chart going back from February all the way back to July of last year. You can see that we basically skirted the bottom from November to late December. The run-up started in late January, peaked at around 24,000. And just as I explained to you a couple of weeks ago on Money Talks, we got the expected pullback. Now, some of the news are portraying this pullback as if it is part of this Kraken news, which I'll get to in a minute, regarding their shutting down staking in the US. That is not true. The pullback yesterday and the day before started long before the Kraken news or even the rumors. Brian Armstrong from Coinbase did mention a tweet that there were rumors circulating about the SEC cracking down on staking, but my belief is that the pullback that we're seeing is 100% market driven and not news driven. Okay, so this is exactly what we want to see. Nothing goes straight up, folks. Nothing goes straight down. We do get large moves up and down in Bitcoin. It's an 80 vol asset, meaning it's very volatile versus traditional stocks. That's fine. We expect that. That's why, one of the reasons why, from a price perspective, we're interested in it. I don't spend a lot of time, as you know, talking about price and trading strategy on Money Talks because I'm a long-term holder and investor. But right now, the technicals are showing what is likely to happen, and it's super interesting. Okay, so let's take a look at that. So as I expected, we're getting this pullback from the highs, and I think it's going to converge down to this trend line. So there is a trend line that's been forming, and I just lost my light here. Hopefully it'll come back on. There we go. So there's a trend line that you can see here, and the trend line in technical analysis is basically a line that touches the most number of candles going back over a desirable time frame. And so that time frame here goes from June all the way through today and points to Bitcoin touching off of the, let's call it the 21,100 trend line. Not bad, right? Okay, so that's good, but it gets even better. It looks like this trend line is right there around 21,000. The 50-day moving average is also approaching the same trend line. And I'm going to fix my light here while I'm talking. It's approaching the same trend line. And I expect a very healthy bounce. We may go sideways a little bit, but I expect a very healthy bounce off of that trend line. Okay, we'll see what happens ultimately, but that's what I expect. Now, as I told you over the last few weeks, I see nothing but clean air from basically 25,000 to new highs. If you look at the resistance lines that are there, combined with what I'm going to talk about in a minute, I see nothing but clean air. Ethereum is moving in lockstep with Bitcoin right now, so I'm not going to spend a lot of time on that. I'll just quickly show you the Ethereum chart here, but like I said, it is really moving in lockstep. So here's Ethereum, and you can see it's also going to bounce off the 50-day moving average in the next couple of days, and I expect a bounce back to new swing highs. I think for Ethereum, a close above 1800-ish on a weekly would basically represent the equivalent of clean air that we have in front of us. Sorry for the clean air reference. It's a Formula One driving reference, and I got a lot of feedback that there's a lot of Formula One fans here as well. So hopefully you all know what I'm talking about when I say clean air. It basically means there's no one in front of you. And in this case, in technical analysis, it means there's no resistance ahead in order to make new highs. And if you believe in technical analysis, and I believe in it, but I think you have to blend it with the macros, with news, with the fact that you've got an exponentially growing asset, and it all factors in, okay? And so I do believe that we have rosy days ahead here, and the expected pullback is really, really bullish for Bitcoin, Ethereum, and then the secondary altcoin season that is likely to ensue. And we've got some good news on the altcoin front for Abra fans out there, which I'll come back to in a minute. I'm just checking my notes here. Okay, so why do I believe that we've got not only clean air ahead of us, but we've got positive macros? So if you've been paying attention let me stop the share for a second. If you've been paying attention on the news front, you know that we've basically been in this kind of debt crisis where Congress has been trying to raise the so-called debt ceiling. This is something we've done dozens of times in the last 50 years. It basically is what is required for Congress to authorize the selling of bonds, which in English means they print more money in order to raise the debt in order to fund themselves. And as opposed to getting their financial house in order, they just print more money via debt. Okay, so in the meantime, while all of this is going on, right, very interesting, it looks like the Treasury General Account is going to have to be drawn down. So let me explain what the Fed has been doing over the past few months. As you know, we went from this state of quantitative easing to a state of quantitative tightening. That is basically facilitated by a combination of the Federal Reserve raising interest rates, which it's been doing, which causes credit tightening, or it stimulates, I should say, credit tightening, combined with a sell-off, if you will, of their accounts, which has the effect of flooding the market with bonds, which lowers the price of the bonds, which raises the effective interest rate on bonds. Price and yield are inversely correlated in the bond market. Okay, so these rising interest rates are having the desired effect of slowing down an overheated economy from their perspective. I don't agree with what they've done to some degree, but it is what it is. Now, separate from that, right? The Treasury has an issue in that they can't sell more bonds, so they have to access the $500 billion they have remaining in their Treasury General Account. This $500 billion is going to be drawn down, and it's basically going to flood the market with more cash, right? Which is also going to have the, it's not the same as selling bonds, but this is actually going to increase liquidity in the banking system. So it has the opposite effect, or I should say a balancing effect to what the Fed is doing. So if you think that you're too late by missing the 50% run up in Bitcoin from the lows to now, I would posit that while there are definitely going to be pullbacks, and we could see a large correction once the Treasury General Account is emptied and the liquidity tightens again, I do think that this is setting us up for probably 6 months of a significant run up. Could be 5, depending on how long it takes for Treasury to empty their coffers, which, as I said, has a significant impact on overall liquidity in the risk on asset markets. Okay, and we've seen this in the S&P 500, and we've seen it in, of course, in crypto as well. All right, so Arthur Hayes, as per normal, had a fantastic overview of how this TGA, Treasury General Account drawdown works, how it interacts with the Federal Reserve's overnight reverse repo agreements, which is the most common way for generating money market yield in the United States, and how this is all going to play out over the next few months, and why in the short term it represents a significant increase in liquidity. Midterm, we may get a little bit of a pullback, and then I do think that after the unwind is finished, like I said, pullback, and then you're going to see Fed basically capitulating when they realize that we've had certainly a V in a recession, and usually because they're a trailing indicator, they see this recession will probably going to be in a V-shaped recovery already, but they're going to announce that they're going to either start lowering interest rates or are committed to keeping interest rates steady for an indefinite time frame. All of this is long-term bullish for risk on assets, in particular crypto. And what that means for me in English is I continue to hold. All right, so that's price action. Now, in addition, we've had a bunch of news this week regarding not only the banking system, but Kraken and staking. So Brian Armstrong tweeted, and I'll try to find the tweet, but he tweeted on, I think it was Wednesday night US time. I was traveling, so I have my time zones mixed up. But he tweeted that he was concerned about rumors that he had heard that that there were pending crackdowns on staking as a service. Okay, and that the SEC wanted to get rid of crypto staking. Let me show you this, if I can find it. So we're hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. I hope that's not the case, as I believe it would be a terrible path for the US if that was allowed to happen. Staking is a really important innovation in crypto. It allows users to participate directly in running open crypto networks. Staking brings many positive improvements to the space, including scalability, increased security, and reduced carbon footprints. Staking is not a security, and he has a link to a primer from Paradigm. Paradigm is a fund started by his former co-founder, Fred Erzum, and they have a very interesting, well-written article on staking does not turn ETH into a security. And then he goes on to explain why regulation by enforcement doesn't work. And it, I guess, depends on your perspective on that. We'll come back to that in a second, but cutting to the chase, there was a settlement between the SEC and Kraken announced last night US time, or I guess yesterday afternoon US time, during business hours, that Kraken would no longer offer staking as a service. Now, there's a nuance here, and this nuance is very important. Now, before I get to that nuance, Hester Peirce, as per most crypto enforcement actions, came out against the action and basically said that using enforcement actions to tell people what the law is in an emerging industry is not an efficient or fair way of regulating. Of course, she's 100% right. You cannot regulate, or actually you can enforcement action your way into an understanding of what the regulations are. It will consistently be a moving target. We get new presidents, we get new House finance chair persons who oversee the SEC, who oversee the CFTC, and they all have different opinions on this. So the only way to deal with these opinions is to codify things up front so that we know what the rules are, we know what the regulations are. Congress can then step in and say, we don't like the way you're interpreting the regulation, so we'll make new law, which clarifies how you implement regulation, et cetera, et cetera. And that's the way it should be. But right now we're in this mode of enforcement leading to regulation, not the other way around. Okay, so again, there's some nuance here. What is the nuance? So if you want to run a node, right, an Ethereum node, and put ETH into a contract on that Ethereum node, I think what the SEC is saying that they would deem that that's not a security, or at least they implying in their commentary regarding Kraken that's not a security. What they are saying is that because of the way Kraken packaged this, because of the way they basically pooled these assets, because of the fact that they were not just paying staking fees directly to clients, they were basically, I guess, taking money off the top and then figuring out what percentage to give to clients, that it kind of looked like an investment contract. I do get the argument, okay? I'm not sure yet if I agree with it or disagree with it. I certainly don't think this was the right approach. I think that there should have been guidance on this, meaning what's a security, what's not a security. You have X weeks to get into compliance if you're doing staking as a service and you're offering it as a security versus not a security. I don't understand. That's not a big deal, right? You have X weeks to do it. Let your clients get their money out in the meantime. If you're not in compliance, here's our guidance. But instead, we get these enforcement actions. So, at Abra, we capitulated to this, and all of our staking services in the United States are only offered to accredited investors under the guise of a security offering. And all of you who have Abra Boost in the United States sign documents with significant disclosures in it about how all of this works, both on the staking side, the lending side, et cetera, et cetera. So you notice in Abra Boost, there's both the ETH-based lending-based yield, which is one offering, and then there's a staking-based yield, which is another offering. But we offer them both as a security. My personal opinions on this are completely irrelevant. And we've simply capitulated to this idea, and that's what we're doing in the United States. I did notice, as an aside, that the House Financial Services Committee yesterday, or again with the time difference, maybe a day and a half ago, 2 days ago, had a session where they were talking about dramatically changing the definition of accredited investor to allow more people to invest in more types of contracts. It is absurd to me that in this day and age, you can go to a casino in Vegas or an Indian reservation or Atlantic City, and you can basically bet your entire life savings in 15 minutes, which is completely irresponsible and absurd. Not that the government should step in and stop you from doing that. Common sense should stop you from doing that. But at the same time, you can invest in many of these crypto contracts, whether they're securities or not. Just because mostly out of fear now, because everybody's afraid of what they can and can't do. So there is a huge disconnect in this country around speculation, access to investment opportunities, et cetera, right? So I'm going to leave that there because I'm running out of time. We did launch new tokens this week at Abra, so that is cool. And if you upgrade to the latest version of the Abra app, I'm going to read you the list. I know Solana is one of them. I think BNB is another. Let's see. You see, just when I need it, I can't find it. But I do believe it's Solana, BNB, Ape, and a few others that we get a lot of requests for, and that is great news. So congrats to the engineering team for getting that out. It's non-trivial to add non-Ethereum or non-ERC20 tokens because you have to deal with deposits and withdrawals, which means supporting an entirely new chain. And because of the move to our new trading system, it's a lot of work to add new tokens. So we want to add as many tokens as we can that are liquid. Here's the list: BNB, Solana, Cosmos, Ape, Quant, Near, Axie Infinity, Curve DAO, CVX, ENS, which is the Ethereum name service, and DYDX. So that's pretty cool. And with more coming, I think we're going to be adding Shiba and some others in the coming weeks. So it is a non-trivial undertaking to add these tokens. I know it sounds super simple. I'm still getting bombarded with questions online about the I think it's called Flair, which was an airdrop from Ripple XRP, and we do want to support it. I did some more checking. This Flair token was released more than a year after it was originally promised, and our team had moved on to other things. That having been said, I am trying to figure out how to get it to you. The problem right now is we're not in a position to easily add the Flair token itself to the Abra app, which means that if you want the Flair, either you have to figure out a way to get it outside of Abra, where we would send it to you on chain. I don't even know the cost for that, or we basically give you the USDC or XRP equivalent into your Abra wallet. And so I'm sure many of you won't want that. You'll just want the Flair, but I'm doing what I can to try to solve this for you, knowing that we don't really have the bandwidth to add Flair, which is a tiny token to the Abra app right now. So I am working on a solution. Bear with me. It's not going to be quick, but I am working on it. Okay. So I mentioned that there's been some news on the crypto banking front, right? Crypto banking is a catch-all phrase, but in this instance, what I mean is the ability for companies operating in the crypto space or individuals operating in the crypto space, funds operating in the crypto space to have a bank account, have a place where you can make deposits, potentially store crypto within the banking system, et cetera, et cetera. There have been a series of events over the last 60 days that are, I wouldn't say horrifying, but extremely concerning as it relates to the broader banking system. A lot of this was, of course, precipitated on the collapse of FTX and the fraud within FTX. I'm going to remind you that what happened with FTX appears to be fraud, not a direct result of crypto products themselves. Okay, meaning that you could have done this fraud with equities, commodities, or other asset classes as well, potentially even securitized real estate for all I know. Okay. Nick Carter, who I love dearly, is a really smart, brilliant guy, wrote another great article on this. Nick was covering the proof of reserve discussions going on, and before that, all of the FUD around energy use and mining last year. Now he's got his sights set on the banking system. So this is some background. There was a undertaking by the U.S. government going back about 10 years ago called Project Choke Point. It's well documented. You can look up Project Choke Point, or Operation Choke Point. You can look up Operation Choke Point on Wikipedia, and you'll see that it was a real undertaking by the Department of Justice in cahoots with this OCC and the FDIC to some degree, where they basically used the banking system to police businesses they didn't like. They wanted to get rid of gun dealers, certain remittance companies, certain money transfer, gambling companies, whatever. And they basically made it very difficult, if not impossible, for a lot of these companies to get bank accounts. It turns out that this is highly illegal. You cannot interfere with the ability for banks to do business with legal businesses. You can put guidelines in place as the FDIC or OCC in order to make sure that you're not taking on unnecessary risk, but you cannot prevent banks from doing business wholesale with an entire industry that's legal. Okay, so that practice was supposed to have stopped around 2017, 2018, 4 or 5 years after it started. Now, I can tell you, having worked in the money transfer and remittance business, this practice did significant damage. It caused deaths. Well, how can the Department of Justice and OCC policing banks to close down certain bank accounts cause people to die? Well, if you're sending remittances to Somalia, right, to a war zone, and the correspondent banks can't service remittance companies that have bank accounts in those areas, you can't get remittances into those areas. And all of the remittances that were going into that part of Africa in that time frame were completely shut off from the United States. It was an absolute disaster, and a lot of people didn't get their money, and it did lead to people dying. It actually led to suicides. Okay, I've seen documented cases of this. Horrifying what happened. Now, I'm not saying that that's what's going to happen here, but the point is the same. This is illegal and it has to stop. So let me give you a timeline. December 6th of last year, Senator Warren, and this is all laid out in Nick's article. I'm just going to give you the highlights. On December 6th, Senator Warren, John Kennedy, Roger Marshall sent a letter to Silvergate Bank. It's a crypto-friendly bank, and they were being scolded for providing services to FTX and Alameda Research and lambasting them for failing to report suspicious activities associated with those clients. In other words, they're supposed to be able to recognize 100% of fraud going on with 100% of their clients. Completely unrealistic, okay? On December 7th, Signature, which is also one of the most active banks serving crypto clients, announces its intent to have deposits ascribed to these crypto clients. So as Nick explains, in other words, they'll give customers their money back and then shut down their accounts, which would then take down their crypto deposits from a peak of about 25 billion down to 10 billion, and then also completely exit their stablecoin business. Again, a perfectly legal business in the United States. Then on January 3rd, the Fed, the FDIC, the OCC, by the way, the OCC is the Office of Comptroller of the Currency. That is the Department of the Treasury that oversees bank licensing in the United States. They issue a joint statement on the risks to banks engaging with crypto, not explicitly banning banks' ability to hold crypto, of course, because they know that would be illegal, or to deal with crypto clients, but strongly discouraging them from doing so on a safety and soundness basis. Okay. Now, if you get a letter strongly discouraging you from operating with a certain type of clients, from the FDIC in particular, if you're a bank, the organization you most kind of fear is the FDIC, because without your FDIC insurance, you're dead. Okay. So when you get that letter, what do you think you're going to do? You're going to shut down the accounts. So on January 9th, Metropolitan Commercial Bank, also one of the few banks servicing crypto clients, announced a total shutdown of its crypto asset related vertical. Absolutely stunning move. I've known them for years. They were a steward of good things in our space, did absolutely nothing wrong. And we're trying to, participate in the space in a very positive way. Done. On the same day, Silvergate stock fell, and basically it's down, I don't know, from like 150 down to like $15. And there was a run on the bank regarding insolvency fears. Again, all predicated on this outreach by Congress and the FDIC and the OCC, nothing based upon actual announcements from Silvergate itself. On the 21st of January, Binance announced that Signature Bank, because of these policy changes that I just mentioned, will only process user fiat deposits worth more than $100,000. So the irony of this is that Signature is saying, we'll allow rich people, again, going back to the accredited investor discussion, we'll allow rich people to deposit into Binance from a US bank account, but we won't allow, into their US bank account from anywhere in the world, but we won't allow small dollar retail to deposit into Binance because they won't be depositing $100,000. Okay, so that basically tells the FDIC they're no longer supporting retail customers, right, in the United States for crypto, which is, again, what the FDIC claims that they're concerned with. A few days later, the Federal Reserve denies Custodia banks. This is the bank started by Caitlin Long, also a friend. This was a bank she started in Wyoming a couple of years ago. And the Federal Reserve denied their application to become a member of the system, citing safety and soundness risks. And the same day, the Kansas City Fed branch denied Custodia's application for a master account, which would have allowed them to use all of the wholesale payment services and hold reserves with the Fed directly. So now, of course, the Custodia is in a lawsuit with the Federal Reserve over these policies and lack of positive outcome. On the same exact day, the Fed issued a new policy statement discouraging banks from holding crypto assets or issuing stablecoins, and broadens their authority to cover non-FDIC insured state chartered banks like Custodia, which can hold crypto alongside fiat for its banking customers. Now, I have to check on this. I do think that the Fed may be within their rights to step up oversight to oversee state chartered banks that aren't FDIC insured, but only to a point. Okay, so I have a feeling that that piece is going to play out in court, and I wouldn't mind if Wyoming took the charge and didn't force companies to use their own money to fight that out and decide where, for example, Wyoming regulation stops and Fed regulation starts and vice versa. So we'll see how that plays out. Anyway, it just goes on and on and on. the amount of action in the space. Paxos, which has been a fantastic player, they issue not only the Pax dollar, but the BUSD dollar. We use them for storing our stable coins here at Abra. They're now being investigated, and their OCC bank charter is likely to be denied. Again, done nothing wrong. Profitable, successful, great steward of moving crypto forward in the United States and globally, for that matter, given how much stablecoin they store in their network. Okay. Anyway, so the bottom line here is this is not a good look. This is, as Nick correctly calls it, Operation Choke Point 2.0 is underway. It was illegal the first time, and it is illegal this time. And it is my hope and belief that at least the Republican-controlled House of Representatives that controls the House Financial Services Committee will step in, take action, and fix this. All right. I'm going to try to have Nick on the show. Nick's pretty busy. I'm traveling again for the next couple of weeks, but I'd like to have him on Money Talks as this unfolds and as new developments emerge, and we will continue to cover this. I am very passionate, as you can tell, about this topic. I truly believe that access to commerce and access to the underlying financial services that enable commerce is the only known tide that raises all boats on this planet, full stop. Okay. And if you're going to selectively ban companies that are good actors, right, from being able to access the banking system, right, I have a major problem with that, and all of you should have a major problem with that, in my opinion. Okay. All right. Enough of that. So hopefully that wasn't annoying, at least interesting. So some more Abra news. We are going to be launching limit orders. I know a lot of you like the new market order feature, like the price protection. Thanks for the positive comments. But many of you have been asking to set a price so that you can get your entire order filled. If the price hits, that's known as a limit order. We are working on it, final testing, and I hope to get it out this quarter. We'll have more to say on that soon. I do have some. I will have some news on CPERCs in the coming weeks. We've come closer to finalizing our plans for what's going to happen with our use of CPERCs within Abra. This doesn't affect, the piece of CPERCs which isn't allocated to Abra. That's the Crypto Banking Alliance's piece. But we're looking at using CPERCs for some of our upcoming NFT Web3 features. I'll have more to say on that. I don't want to give too much away. I keep announcing stuff way too early. I just want to let you know that I promised that we're working on this. We are working on it. It's a big deal to me. And I'm going to do a better job of not announcing stuff too soon this year as kind of a mantra. On the institutional side, let me talk about this because I know we have more and more clients, high net worth clients. Some of you are in our private banking services at Abra. Some of you are actually using our over-the-counter trading services for derivatives, using our APIs. We are greatly expanding in this area. So we have spot trading, derivative trading, all live on our over-the-counter desk. Our prime business is actively lending to institutions. This has been a big part of my trip to the Middle East and Europe. And I'm really excited about the growth that we're seeing in this area. Everything from, simple trades, getting in and out of things like Tether, or Bitcoin in very large quantities, could be tens of millions of dollars, to hedging positions with put and calls. We're open for business in those areas, and would love to hear from you on your wants and needs. And for everyone else, of course, we continue to have our awesome Abra app that you can use for all of your trading, staking, borrowing needs. Okay. I will most likely be making an announcement next week regarding what's happening with Celsius, and may not be next week, could be the week after, but in February for sure. I suspect I'll be making an announcement regarding Celsius. I'd say it's 50. Yeah, I'm not even going to give you odds. I'm working on something there, which I'll talk about. All right. Talked about CPERCs. So that's it. I wanted to keep it short and sweet. I'm trying to keep these updates to 30 minutes. I don't really know how long I've been speaking, but my guess is it's longer than 30 minutes. But anyway, so yeah, I was just reading the news before here. I know some of you were commenting on my fandom of the NBA. I'm a huge basketball fan, so thanks for your comments on that. I'm just looking at the news. This is crazy. Are you guys watching this? Kevin Durant traded from the Brooklyn Nets to the Phoenix Suns. I remember, like, what was it, 3 or 4 years ago, the Nets were like basically buying this kind of, billion-dollar dream team, and it was a disaster, right? They had Kyrie Irving, they had James Harden, they had Kevin Durant, and it was just an absolute disaster. And they're all gone now, gone to different teams. Harden's in the 76ers, Kevin Durant's at the Phoenix Suns, and I think Kyrie went to was it the Dallas Mavericks? Yeah, Kyrie Irving was traded to the Dallas Mavericks. And Russell Westbrook heading to the Jazz. He's going to get a buyout from them. So basically, I think the All-Star break is this week, right, or next week. It's going to be a entirely different NBA after that. So it's going to be a little confusing at first, I know, for me, because I don't watch enough games to be able to keep up with everything going on. Anyway, the Warriors got traded Wiseman back for GP2. So those of you who are Warriors fans know who GP2 is. Gary Payton. He was with them when they won the championship last year. So that's pretty cool. And anyway, so I was just looking at the livery for. You guys see this? I don't know how many of you are into Formula One, but livery is the term in Formula One for the designs on the cars, and all the teams make a big deal out of showing off their livery. Let me show you this. If you're not interested in this, you can just call it a day and dial out. But for those of you who want to stick around for a second, this is Alfa Romeo's. I was looking at it before the show. This is their livery that they just released. And I was looking at this earlier. There's a schedule they publish. This is cool. Ford is returning to Formula One with Red Bull. That's really exciting. I mean, those of you outside the US, I don't know if you're aware, but Netflix started this show called Drive to Survive, which I'm sure is on globally. But in the US, it's basically just propelled Formula One to all kinds of like interest levels, excitement levels. It's going to be, I think we're the only country to have 3 races next year, right? So we've got Miami, Austin, and now we're going to have Las Vegas. And then with Montreal and Mexico City, that's 5 races in North America alone, which is astounding. I mean, it's basically 0. Back when I was a kid, I mean, we had Watkins Glen, I guess, but it was basically 0. So what's happened is astounding. And now to see Ford coming back in is pretty cool. And you can see here the headline. Anyway, so I love this stuff. And so I'm looking at, I just left the Middle East, but I see that the testing schedule is 2 weeks away in Bahrain, and it can't come soon enough for me. I'm a fanatic, so I'm looking forward to it. Anyway, enough of that. All right, so thanks for joining. We've got a lot of news right now in crypto land. I'll try to make heads and tails of it for you as we go. Abra is open for business as usual. And let me know if there's anything you want to hear about. I'm not sure where I'm going to be next week. I may be on the East Coast, I may be on the West Coast, but we should be able to get another episode of Money Talks in, and we'll see you then. In the meantime, have a great weekend, and thank you for joining. Take care, everyone.